There's few names in the space that have what we would call, in the nicest possible way, a rabid shareholder base. One of those names is Wesdome Gold. And by rabid, I mean we were inundated with requests to cover Wesdome's Q1 earnings. We got numerous comments on our YouTube channel, we got private messages on X, we got replies on unrelated tweets requesting the coverage, and we had responses to our newsletter requesting coverage. Even comments on unrelated articles on our website, TheDeepDive.ca. So with that in mind, let's dive in. Wesdome in the first quarter of 2025 posted top-line revenue of $188 million, which was an improvement of 86% versus Q1 2024, when the company recorded revenue of $101 million. Revenue was also up on a quarter-over-quarter basis, with Q4 seeing revenue of $183 million. We should note here, however, that those figures are in Canadian dollars, as are all figures in this video unless stated otherwise. That Q1 revenue figure follows the sale of 45,000 ounces of gold during the quarter at an average price of $28.82 an ounce. Gold sales were up 27% versus the year-ago period, when the company sold 36,000 ounces at an average price of $20.93 an ounce. Despite the massive jump in revenue, cost of sales was up just 11%, going from $54 million to $60 million on a year-over-year basis, which led to gross profits ballooning by 365% to $103 million versus $22 million in the year-ago period. Net income improved even more dramatically, moving from $10.7 million or 7 cents per share to $62.5 million or 42 cents per share in the first quarter of this year, a 483% increase and a new record for Wesdome. Adjusted net income figures were unchanged versus net income figures for both Q1 2024 and Q1 2025. EBITDA in the first quarter of this year, meanwhile, totaled a record $119.4 million, which was a 193% improvement versus the $40.7 million EBITDA figure recorded in Q1 of 2024. Where things really shine, though, for Wesdome is in the cash flow figures, with net cash from operating activities moving from $46.5 million or 31 cents per share to $80.2 million or 53 cents per share on a year-over-year basis, which was also a new record for the company. While free cash flow improved from $19.4 million or 13 cents per share to $47.5 or 32 cents per share. Wesdome ended the first quarter with $168 million in cash on the books, an improvement from $123 million at the end of 2024, while working capital jumped to $181 million as compared to $131 million at the start of the quarter. Total liquidity sits at $318 million, which includes an undrawn $150 million credit facility. All right, time for the production data. Wesdome in the first quarter produced a total of 46,000 gold ounces, which was a 37% improvement year over year from the 33,000 ounces of gold produced in Q1 of 2024, but down from the 50,000 ounces of gold produced in Q4. The bulk of production in Q1 came from Eagle River, which posted production of 29,000 ounces, a 16% increase year over year from 25,000 ounces, and also an improvement from the 27,000 ounces produced in Q4. Head grades improved slightly here, from 15.5 grams per ton to 15.6. However, recovery slipped from 97% to 96.3. Milling improved from 52,000 tons to 60,000 tons, leading to the overall production increase. Kiena, meanwhile, produced 17,000 ounces of gold, a 98% increase from 8,000 ounces last year, but a sharp drop from the 23,000 ounces produced in the fourth quarter. Ore milled here came in at 49,000 tons versus 45,000 tons in the year-ago period, while grades nearly doubled from 5.9 grams per ton to 10.8. Recoveries were up from 98.2% to 98.9. While results at Kiena were positive year over year, quarter over quarter was a bit of a different story, with head grades retreating from 11.5 grams per ton to 10.8, and recoveries declining from 99.1% to 98.9. The big impact here, however, was the tons milled, which fell from 62,000 tons to 49,000. So we called up the company and asked a couple questions. The first being, what's going on with the grades at Kiena? They've been fluctuating for a few quarters now. The response is that this is largely due to mine sequencing, which is a fairly standard answer. But then they expanded on that comment, saying that they're tired of the volatility and as a result, they're changing their mining method. Instead of doing long hole mining, they're moving to a cut and fill method, which means they can be more selective on which ore they extract. So grades can be a lot more consistent. And then there's the costing. Cash cost for the first quarter came in at $13.20 per ounce of gold, as compared to $15.17 an ounce in the year ago period and $11.87 last quarter. But that's in Canadian dollars. Most peers report in US dollars, and that's how the average retail investor thinks of gold prices. In US dollar terms, cash costs were just $9.20 an ounce, as compared to $11.25 an ounce in the year ago period and $8.48 in Q4. All-in sustaining costs, meanwhile, came out at $13.66 US dollars an ounce, an improvement of 17% from the $16.50 figure reported in the first quarter of 2024. AISC for the fourth quarter comparatively was $13.73 an ounce. Broken out, Eagle River saw all-in sustaining costs rise from $12.32 US dollars to $13.37 an ounce on a year-over-year basis, while falling from $15.12 an ounce in Q4 with normalization expected in Q2. Kiena, meanwhile, saw AISC decline 53%, dropping from $30.23 US dollars to $14.12 an ounce on a year-over-year basis, but rising on a quarter-over-quarter basis from $11.91 an ounce. Production fluctuations are obviously the reason for these unit costs jumping all around, and we're told costs are expected to normalize soon as a result of changes being put in place. All right, time for a quick look at the outlook before we end the video here. Production in 2025 is expected to come in somewhere between 190 and 210,000 ounces, at all-in sustaining costs between $13.25 and $14.75 US dollars an ounce. At Eagle River, production is expected to be between 100 and 110,000 ounces, at grades between 13 and 15 grams per ton. On a straight line basis, the operation is currently on a path to beat that guidance, with 29,000 ounces of gold produced in Q1 at average head grades of 15.6 grams per ton. And we've been told that production guidance is about 55% back half weighted, so things here are certainly on the right track. AISC here has been guided to be between $1,400 and $1,550 an ounce, but we're told some CapEx is expected to come in yet that will put the mine within that range, thus our normalization comment earlier. It's a bit of a different story at Kiena, however. Guidance is currently calling for 90 to 100,000 ounces of gold at grades between 10 and 11 grams per ton. Production of 16,693 ounces doesn't really get them there on a full year basis, but with grades of 10.8 grams per ton in the first quarter, the grade is certainly there. We're told production guidance is 60% back half weighted here for 2025, so they might be able to make that target yet. AISC, meanwhile, has been guided to be between $12.25 and $1400 US dollars an ounce. So if they do manage to improve production, unit costs will likely come down dramatically and put them near the lower end of that range, assuming no major CapEx later this year gets thrown into that mix. All right, so let's wrap it up. Despite the issues at Kiena related to production guidance, Q1 was a strong quarter for Wesdome. They continue to be one of the lower cost producers on the market right now, and as a result, Wesdome is churning out free cash flow like crazy. That cash flow has already been used to acquire Angus Gold, which will transform Eagle River into a district scale opportunity for them. And guys, don't forget to catch our video on that transaction. All right, everybody, as you can see, we've got lots of earnings videos on our channel right now, so make sure to check them out. We continue to reach out to companies to try to get a little bit more color for you guys that want these stories, and we're going to continue to do that. So keep watching. If there's stories we haven't covered that you want us to, as always, guys, let us know in the comments section. Thanks for watching, everyone.